Hey, how you doing, traders and traderettes? This is Dr. Greg McLeod from Elite Traders University and the Live Forex Day Traders Den. And this is another edition of Bulls versus Bears. This is my weekly Forex forecast where I go over what's going on in the markets, what to look for in the Forex and currency and commodity markets. So strap on your seatbelts and get ready for a wild ride as we cover the upcoming events for the week beginning October 7th, 2024. Okay. And let me go ahead and bring up our slides and get our presentation going. And again, lots of good things happen as we start the fourth quarter, right? And here we go, sharing my screen. Give me a moment here. Excuse me. Share. We're going to share screen number uno. Okay. There's some sound and make sure that you can hear me and see me. We got the microphone going. Sound check, 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 check. All right. And here we go. View and reading view. Okay. All right. So this is a presentation of Elite Traders University, www.elitetradersuniversity.com. This is where you can learn how to trade using my high probability scalping Forex system in 90 days. Use with a system called Pip and Run, guys. I help people make money fast and quick, and not to spend only like a couple hours a day in front of the computer. That way you can put compounding. If you're over 55 and you're a man and you have no IRA, your IRA is like your 401k is like 0K, which is not okay. And you need to build it back fast because you really don't have that many years left to make money. Well, the fastest way to do is compound with short-term day trading called scalping. I make it fast, easy, and low risk. So contact me at elitetradersuniversity.com. I'll show you how to get involved later. Okay. Weekly Forex forecast, Bulls versus Bears. Here we go. This is our presentation here. And I wanted to direct your attention to risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And we'll go ahead and get it going. Okay, let's get it rocking and rolling. And I've been doing this for 30 years. And I am so happy to be able to present this to you. I'm one of the foremost authorities of short-term day trading called Scalping. I worked for one of the largest Forex broker dealers in the world as a currency analyst and strategist on Wall Street. And I have a degree from UCLA, and also I hold a doctorate degree that in Christian business and leadership. And I've created many systems. I'm a published author as well. So I'm uniquely qualified to tell you about the Forex market. So here we go. So our agenda, we're going to look at the US dollar index, the euro dollar, the pound dollar, Aussie dollar, and dollar yen, dollar CAD. And these are the Forex majors. I'm also going to include gold, and we'll probably take a look at oil and the S&P 500. But first of all, we're going to start the economic news. So let's go ahead and I'm going to share my powerful tool for finding the economic news, what's going on. I'm going to go to My Market Heat Map. That's www.mymarketheatmap.com. You can access it for $19.99 a month, but you want to get access to one of the 6 powerful heat maps any time of the day. This when the market is open, these things will flash and tell you what's moving, what's shaking, what's hopping, what's popping, what's dropping, and what's not in the market. And you can come down here to the economic calendar where you just got to refresh the screen a little bit and then click show more, and then you'll get to the economic calendar, right? And so for free, you get access to this powerful economic calendar. So I'm going to go through this very quickly, and then I'm going to tie in with technicals. So if you want to fast forward through this, I really advise that you wouldn't. But if you want to get to the technicals, we're just going to take a couple of minutes to go through the high probability events here, because part of the Pip and Run system is we look for currencies which are being moved by news. News is like the big rock that's thrown into the water. It creates a ripple effect in the water, and we trade the ripple. And that's why we have such high probability, so many winning trades, because we don't trade during the news, but we trade maybe a half hour to an hour after the news. But the flag tells us what we're going to trade. So on this day, on Monday, October 7th, we're going to be trading the Aussie dollar. Why? Because a lot of people are going to be looking at it. This is a high impact news item, and that's the NAB Business Conference. I really don't need to know what they're actually saying or what these numbers actually mean. I just want to be in here and using my system and using my approach, my multi-time frame approach. I'm going to be looking for entries and opportunities in the Aussie dollar. Okay, that's how people say, well, how do you pick what to trade? I look at the economic calendar. The economic calendar tells me what I'm supposed to be trading. Okay, so I'm looking at Aussie dollar, October 7th for the NAB and the RBA Minutes. RBA Minutes, a Reserve Bank of Australia, and they are going to tell us what the interest rate picture is, forecast for the coming the end of the year. Right, going to Tuesday, October 8th. You got the Canadian flag, right? You got the maple leaf. Balance of trade is going to come out. And so I'm going to be looking at the Canadian dollar on Tuesday, more Aussie dollar on Tuesday as well. Westpac consumer confidence change supposed to actually rise from negative 0.5 to 0.8. Usually going into the fourth quarter, the numbers are going to be positive, and that'll be positive for the currency. Looking for Aussie dollar to rise, Canadian dollar to rise as well, the US dollar to fall because of the seasonality. So most of these are going to be about the same. Here is the New Zealand. They're going to have the RBNZ interest rate decision. They're expected to cut rates from 5.25% to 4.75%. And so the Kiwi dollar will be heavily in play at 9 p.m. Eastern time on Tuesday, right? So we're going to look for Aussie and New Zealand currencies to be in high play. That's what I'm going to be trading. I'll be posting trade tips and ideas. Make sure you join the Free Forex Facebook group and the Live Day Traders Den, and that will tell you more about what we do there, and you can sign up, and I post tips and tricks and live webinars as well if you enjoyed this one as well. And don't forget to give this video a like, a thumbs up, and get the algorithm kicked in. People have really complimented me on some of my calls I made last week on Bitcoin and on the Aussie dollar and New Zealand dollar and pound yen. So if you want more people to be able to view this and for me to actually be motivated to keep doing this, because I don't have to. I already have the crystal ball. It tells what's going to happen. I'm sharing it with you guys. So if you would do me a favor and if you want to continue this, I'm not asking for any money. I don't need your money because I make money, right? But if you want for me to continue doing this, come on, give us a thumbs up, okay? It'll benefit you and everyone else in the community. Thursday, October 10th, we got core U.S. inflation. Inflation rates are one of the other big drivers. Employment is a big driver. Interest rates a big driver, and inflation. Those are the three big pillars that drive currencies. And if you don't have your finger on the pulse of those economic announcements, you got your head in the sand, and you're probably getting beat up in the market. You don't know what's happening. 8:30 happens, and things start going. The crop report comes out. And Clarence Speaks is giving the crop report to the insiders, and you're just trading like, hey, what's going on? And then why did I get stopped out? Because you're not paying attention to the economic calendar. Well, I don't need the economic calendar. I don't even understand economics. Can't spell economics. I failed economics in school. It doesn't matter. Whether you pay attention to it or not, it will impact you if you don't pay attention to it. These economic announcements are released at 8:30 a.m. and 10:30 U.S. Eastern time. And so the others, they get released. The Asian ones get released in different times. They just don't really keep a real tight schedule. I mean, one day it's at this time at 9 and other times at midnight. But the U.S. economic numbers come out like clockwork at 8:30 and 10 o'clock. And we got the ADP that comes out at 8:15 or something crazy like that. But inflation's in fact, core inflation rate supposed to drop a little slightly from 3.2 to 3.1%, right? And that would be bearish for the dollar and bullish for the euro, the pound, and then we'll see that in the technicals. Core inflation rate month on month supposed to drop from 0.3, hitting that important 0.2%, right? That was the that's really what the Fed is like, looking for a decrease in core rates inflation. Core inflation is inflation without food and energy, volatile food and energy. Oh, I use food and energy. I love food and I use energy, but so I don't know what this really means. Inflation rate month on month actually drops from 0.2 to 0.1%, right? So that is really what the Fed is looking for. So there's no reason to keep high interest rates and to loosen up, let the dollar drop and let the stock markets and things. We're going to the fourth quarter, guys. And the fourth quarter is where all the money, the big boys make money. You know, October through April and May, we'll see huge runs in the equity markets, into NASDAQ, in the S&P. All of it ties into the stocks. I don't trade stocks. Stocks are kind of slow for me. People say, oh, well, the indices are very fast. Give me pound yen over the NASDAQ. That's just my personal preference, but we're all in the same family. We're all risk assets, okay? And when the inflation is low here in the US and the dollar falls in value, everything rockets higher, right? CPI is supposed to drop from, actually, it's supposed to increase 314.8, 314.9. Hopefully that doesn't spook the Fed. Inflation rate year on year is supposed to drop from 2.5% to 2.3%, getting close to that 2% target that the Fed is trying to reach. The year-on-year rate, 2.3% is the forecast. We'll see if it comes in lower than that. Let's say if it comes in at 2, then the market will go bonkers on Thursday. So October 10th is going to be a big, big day. Jobless claims, 225,000 to 223. It's volatile. It's weekly jobless claims. And the more jobless claims, it's more bullish for the market. Less people to pay means that companies make more money and companies list on the stock market, okay? So it's kind of a, dichotomy that, we look at that, well, we need more jobs. That's good for the economy. It's good for your economy, good for the average person's economy. But for, when you have too many people employed, it means that inflation goes up because more demand with less goods available creates inflation. So even though the Fed has a dual mandate of full employment and low inflation, they're kind of diametrically opposing concepts economically. Okay, enough of that. GDP, we're going to get to the UK going across the pond here. Friday, October 11th, the day before my birthday. We have the GDP year on year supposed to actually drop from 1.2 to 1.1%. Could affect the pound negatively, but it just means that they're just going to print more money, increase stimulus in order to try to stimulate the economy. And we also have month on month, actually a rise from 0 to 0.2. So, and then PPI month on month, 0.2 to 0.1. The pound is going to be in play on Friday. Okay, so again, we're not paying so much attention to the numbers. It's just that if this is what's trading at 2 a.m., if you're up at 2 a.m. Eastern time, and if you're trading the London market, and we want to trade the pound, and you want to look, there's going to be a lot of activity in there, right? I'm not going to be trading the Canadian dollar here unless I'm trading pound CAD. Why? Because the news is here. The Union Jack flag is right here, tells exactly what's going to trade. So if you're trading something weird and then you get stopped out, well, then don't blame me, right? Okay, and 8:30 that morning, again, we have PPI, producer price index, month on month, supposed to actually drop from 0.2 to 0.1. Again, that'll be probably bullish for risk assets, bullish for the stock market. For PPI year on year, supposed to drop from 2.4 down to 2%. Again, everybody's trying to get that 2% target for PPI. Also looking good as well, dropping from 0.3 to 0.2. Numbers moving in the direction that the Fed would like and the market should really, really like. So if you are trading NQ, US 30, if you're trading any of the indices, look for those to rally sharply this week, because this is if the forecasts are correct. Now, sometimes they get the forecasts wrong, right? We had a strong non-farm payroll number last week as well. We'll see if there's going to be a revision next month, right? They probably will revise it in January after everybody gets their Christmas bonus. After they get their Christmas bonus, they'll probably revise the heck out of those numbers. But for right now, we'll trade the fundamentals. Again, I call them fundamentals. Even though somebody may actually have the actual numbers, the truth doesn't seem to matter in this economy. Michigan consumer confidence is supposed to actually unchanged at 70.1, and that'll be the last announcement for that Friday. And then we have some inflation rate data coming out Saturday, October 12th, my birthday. Hey, they're going to release some inflation data. We have inflation in China dropping from 0.6 to 0.4. And remember, we don't trade, I don't trade the Chinese renminbi, or the yuan as it's called, but the proxy for that would be the Aussie dollar and the New Zealand dollar, as China is those two countries' largest trading partners. Okay, now right here at this point, we are starting the technicals, okay? So if you are gotten to this point and I start talking about China, the fast forward, you're like, Greg, I'm tired of this economics. get to the technicals. And here we go. We're going to start with the United States dollar, right? The US dollar, we're going to use the Dixie, which is the index as a basket of currencies versus the US dollar. And all the majors trade against the Dixie. The DXY is the same as USD, okay? We don't trade them directly, but we can look and see that, hey, we've had an uptrend, higher highs and higher lows. Interesting, though, we're hitting some support right here at the end. Lots of support here in this 185 area. We've been stuck in this range for almost a year now, and we kind of hit the bottom of that range. And like I said the last week that we would get we got a rebound from that range. Will we get a breakout? We're seeing this multi-bottom here. And, in order for the only way we could probably see a bounce from here, a bounce up, is if that economic data came in hotter than expected. If inflation is actually rising instead of dropping, well, nobody gets paid in Christmas time. So my feeling is that it being the fourth quarter, and that's just my opinion, just my 2 pips worth, that we break below. I think we break the dollar index finally breaks this support this week. I'm going to go on a limb, like Greg, my crystal ball is saying this thing is going to break south, and that's going to ignite a major rally in the tech sector and Bitcoin and also the commodity. If they keep firing rockets at Iran, we can see oil hitting $100 a barrel, and China's going to be using oil as well. So you're going to have this really trifecta of things coming together, this confluence, which could drive the dollar outside of this trading, this tight band here. Because at here, there's also, there's a slim chance that we could get a bounce if all the data, for some odd reason, and it's October, right? October is like, like the jinx, Halloween, we've had several stock market crashes. The October crash at 87, you crashed in October, and Black Tuesday or Black Monday, 1929. We've had crash after crash in October, and we're just getting started with October. But at the end, it usually by Halloween, things usually get better. So we may get a bounce if that data turns a little hot, right? And so that might be kind of interesting, a head fake, right? So I would, we need to get past here for what all I was talking about would transpire. The data has to hold. If the data, that's the only thing, if we get hotter inflation, then, then what we could see is a bounce here, and that bounce may be for like the rest of October, and then we may do a turn, one more down. It's just really, this looks like inflation, those numbers could go higher, right? But if we break, that means that's confirming the inflation data. And so what does that look like on a weekly chart? See, that's what I'm looking at. See, that if we look down to the weekly, we got a bounce. Long wick though, right? This was a full body green candle. Sellers came in and said, look, man, we got seasonals here. And then boom, we came back down. We closed. We got to a high of 102.68. And then sellers came in and brought it back down. We closed at 101.42, right? So that's bearish, a long wick though. And so, it tried. It really tried. We got that bounce. I remember I mentioned it in Bulls versus Bears last week. I said we can get a bounce that will take the euro down, the pound down, the Australian dollar down. It would take them down, and it would take the stock market down too, right? But then we got the rally on Friday, right? So let's go ahead and let's walk through this. I'm going to walk it down to a daily. And look, there's our rebound from this strong level of support, right? We have a shades of gray double bottom, a rally. We have some resistance though, right? See, we're in this little kind of fake out, shake out kind of. We've got this area here, so we might get another day of rally into this, right? Now, whether we and then head back down from here. This is the 102.79 to 103.20 area. is that little congestion zone. We take that congestion zone and project it. There's that zone right there. And we can make it a little higher because there's a little wick that goes, we can take that and then extend that into the future. And now we've got an area of resistance that the dollar may rally into in turn, right? So maybe Monday, maybe Sunday, Monday, we get a rally here. Maybe turn around Tuesday, we get the news that will take us down. So bulls versus bears, I am still, based on technicals, I am still short term, like a couple of days bullish. But then after the inflation date, I think we're going to have lower inflation and the fourth quarter rally is going to start. And so I am okay. So let's go ahead and move on. I know I went really hard on the really hard on the dollar index, but let's get down into the majors, right? Let's go right to the euro. The euro is called the anti-dollar. So let's go right to the anti-dollar. We can see that big drop we had starting with let's start with the monthly chart, right? And we look at the drop that we remove all drawings here. Remove drawings. Okay, right. So we had a little bit of a drop and then little pullback here, but look at the trend. This is the monthly chart, higher highs and higher lows, right? This little candle, we had a pullback. We were here, and we pulled back here. Let's take a look at a weekly chart. But we're above, I'm using a 21 period moving average, and that 21 period moving average, we're above it on a weekly, right? And there's our pullback. That was the pullback when the dollar bounced, the euro dropped because it's the anti-dollar. Drop it down to a daily chart. And ooh, look at that. See, this is the 21 period moving average. It acts like a trend line. And you see where we broke below and rose, and we broke below and rose. And now we're below, right? So we may come back and test this lower trend line, probably down to maybe like 109, right? And then we might look for if we get above 111 though, this thing goes, I think it will go much higher, right? Because we're currently below this 21 period moving average, which we can use as a directional, like a synthetic trend line. And we can see we broke below it, but every time we broke below, we snapped behind. So this may be a good area to maybe start building a long position, right? But again, I'm short-term bearish. But fourth quarter, I'm looking for a bull rally to new highs, maybe up in the 115 area. Okay, let's keep it going. Let's moving right along. Keep it spicy. And let's go ahead and go to our go across the pond, go over to the pound, go to cable, and we can see start from the monthly chart, and we can see and I'll remove my drawings here, and we can see we have a very strong the uptrend of the monthly uptrend, higher highs and higher lows from here, and we actually have a long wick down here, and we you probably say, well, Greg, look, how about this downtrend? But what about this downtrend? We're breaking. We broke out, right? And when we break out, usually price comes back to retest the trend line, right? So I am bullish on the pound dollar. Go back to a weekly, and you can see that it's struggling, right? We've got this. It was a full body candle. Now we got an inside day kind of a harami pattern. We got a morning star inside of a bullish candle. Right, daily chart, and there we go. Right, but every time we've got a pullback, we're below the 21 period moving average. But the moment we get behind down there, right, I'm going to add another moving average for you, right? Because I know that by doing a moving average class, if you see the moving average video, make sure you click that link and watch that, because I talk about how we can use moving averages that keep us on the right side of the market, right? So I'm going to go to indicators and go to our moving average, right? Right, I'm going to add a second moving average, our simple moving average, and I'm not going to. We can actually keep it at 9, the default settings, but I actually want to make that a. I keep fib. I use fib numbers, right, and then style. We can just brighten it up a little bit with like a baby blue. There we go. And let's close that up. Okay. So here we go. So price comes back in, came back down, and so we haven't really changed. We haven't made a lower low. We made higher highs, higher low, higher high, higher low, higher high, higher low, right? And so I would look for I'm based on this daily chart, I'm still bullish. I'm bullish the pound versus cable, right? And even though we broke this trend line, we came down. We have not broken this low, right? I think we might be down for maybe Monday, Tuesday, and after the news comes out, we'll see this snap back up to the at least to the 134.29 area. We're currently at 131.20. Okay, so short term, like a couple of days, bearish, but for the rest of the week, I'm looking bullish back up to the 134 area, right? And we can drop down to 4, and you can see that. Look, this dollar strength, guys. Remember I talking about dollar strength. So that dollar strength, and now because why it's GBP/USD, it's against the dollar. The dollar is strong against the pound, and then now we might see a little bit of a bottoming and maybe a return back up to this old area of resistance and maybe beyond, right? But that would be my first TP1. And we're gonna have a nice little low risk entry in the direction there. Okay. All right. Let me know in the chat box if that's helpful and useful. Okay. Thanks for showing me some love, some dollar signs in the chat box as well. Okay. Let's keep it going. And let's go on down, go over to the dollar Swiss, and we can see dollar Swiss on the monthly chart. And we can see that it has been going down, down, down. But we got a little double bottom there on the monthly chart. Dollar Swiss is always a little weird. I really don't cover it that often. Let's go to take a look. We've got some support here. Swiss, they don't want a strong currency and so we might see there is a chance for a bounce here. We got a nice little bottoming pattern here in the 83.95 area. But we are below the 21 period moving average on the weekly and on the daily. It's kind of a mixed bag here. So we just kind of like bounced off the bottom here, right? Double bottom, and we're just now breaking the moving average. And that would be some type of a buy signal there, right? We actually could use this as some type of entry, given that the dollar might be strengthening. We maybe go up to maybe 87.05 to 88.07, the 50 back. The 50 back of this down move, we're looking for a retrace from that. So we might get a little bit of a relief. Technically, from a double bottom point, we usually look for the old high. That's pretty aggressive, 92.35. Something must have really be, inflation may go off, maybe off the chain for some type of glitch in the matrix, right? Some type of like I said, if that inflation data turned negative for some reason, and this guy will probably skyrocket back up to here, right? But the inflation data is forecasted to trend down, but we know it's fundamentals, right? Fundamentals. That's why I'm saying that, you want to be positioned to look at the right currency with the economic data, not necessarily try to game economic data. Well, if it's this, it's that, because they make stuff up, as we have found out with non-farm payroll. Even Jerome Powell said, well, the non-farm payroll numbers are a little sketchy based on blah, blah, blah. It's like he even was confused. Now, I pointed that out weeks ago that those numbers were juiced, right? By someone, I don't know, to benefit some political party, which I'm not going to say. I'm going to stay neutral anyway. It's the uniparty anyway, right? It doesn't matter who anyway. Just vote. Do your duty and vote. All right. Dollar Swiss, keep it going. Okay, we covered Europe. Let's get to the other side of the world. Let's go down to, let's start with dollar yen, right? Dollar yen's another mysterious currency, right? Because it's got the dollar in it, right? And it rallied like a son of a gun. Did it rally? Did it rally? It most certainly did. But it got to a high of 162 earlier. the Bank of Japan started to intervene. They started to raise interest rates, and that caused a little strength in the dollar yen. But look what's going on here. We drop right to the 21 period moving average, right? And we're in like what we call value zone. The zone between two moving averages is a value zone. I didn't really cover that in that moving average video, but it gives me room to make another one, right? I'll talk to you about how every time we hit the value zone, that's also a buying opportunity. So let's take a look at a weekly chart. And we can see that, we started to rise. We started to, last week we got that bounce in the US dollar. The dollar started to rise here as well, right? Going down to a daily chart, walk it down. You can see that we have like some type of head and shoulders, shoulder, head, shoulder, and we're breaking up, we're rallying higher. We're maybe rallying back to this. Not probably won't get all the way up there. Maybe, you never know. But the 38% retracement, the 50 back is at 150.87. We're currently at 147 some change, 47.62. So about 300 pips and possible upward movement, right? So we could see an upward move in dollar yen, right? So I'm bullish dollar yen. And even if the inflation data is a little hot, I don't think dollar yen is a little bit odd because it's two risk off currencies, the dollar and the yen. And so sometimes, good news, bad news for the dollar. Still, the Japanese basically like intervening in the currency, making it weaker so they can sell more goods. Remember, Santa's workshop is not located in the North Pole. It's located in Asia. And the Asian currencies typically weaken going into October through. In fact, my first trade back in 1995 on currencies was on the Chicago Board of Trade, trading options on the yen. And I bought yen puts. A put is an option that makes money when the value of a currency goes down. So I bought yen puts back in 95. And why? Because it was a seasonality. It happened every year since the 1940s, and so that was their clever plan. Not their clever, it was the United States' clever plan to keep Japan from going communist by weakening their currency so they could sell more stuff to the United States. And that way it will keep their economy after the war prosperous so they wouldn't turn to communism and Marxism, right? So it worked. It worked too well. In fact, other countries like China and Malaysia and Korea started to copy this model of weakening their currency to provide a price advantage for their products over local U.S. domestic products, right? So that's why we never call Japan a currency manipulator, because we create the manipulation ourselves, right? It's like, hey, you made us do it. Anyway, moving right along. Let's go to Australia. Again, I'm bullish. Dollar yen, right? And let me go ahead and go right to, let's go to the Australian dollar. And we can see Aussie, we're going to start with the monthly chart. And I'm going to get rid of these lines, but we can see breakouts from consolidation and all kinds of really cool stuff that when you're in our live Forex day trading den, I'll stream live in there. I'll do some workshops in there as well. Absolutely free. Make sure you answer the questions, okay? We got some questions for you, membership questions. And also there is a, will you abide by the rules? I get people going, I'm not going to abide by the rules. Well, I'm not going to let you in the room, right? I don't need you, right? You want to follow the rules and keep the community safe, follow the rules, click the link and have fun. That's all. It's all we ask, right? All right, monthly chart. Look at this nice move, breakout from the 21 period moving average. We got a screaming buy signal right there, right? But we'll go to the weekly and we can see again trading above the moving averages, right? So I'm walking down to the daily. Got a pullback, right? Got a pullback just like we've seen before. Pullback down below, and then we have a turn. And so we're in the value zone where we're not buying at the top, but we're touching this 21 period moving average. We have a rising trend line, so the trend is up, right? Well, people look, it's going down. I'm gonna sell it. Yeah, you're gonna get crushed. Don't do it. Friends don't let friends sell support and buy resistance. Okay, so we want to buy support and sell resistance, and we're very close on the daily chart. As long as we have higher highs and higher lows, this is the definition. This is the classic definition of an uptrend, right? Right. And so we make money when we follow the trend. The trend is our friend, and we can clearly see the trend. But if you got long here because you made a weird entry, I'm not going to call it stupid, but entry, right? You got an entry. You want to buy low, sell high, right? You do like Snoop Dogg. You want to sell high, you want to buy low, right? And so we're entering a zone of, look at a 4-hour chart, still dropping. We don't want to catch a falling knife, right? We want to see some strength. We're below. We can use this moving average as a trigger to get back in the market. So short term, I'm bearish. But fourth quarter, baby, I think this thing runs higher. The 700 era, the whole number round number, right? But right now, we are sunset and then sunrise, right? Moving right along, keep it going. We have the New Zealand dollar. Now we do have the RBNZ. We have the interest rate announcement coming out of New Zealand coming up, and New Zealand right across the Tasmanian Sea there. And wonderful. I got lots of wonderful students from New Zealand. They're like natural born traders. So if you're from New Zealand, you'll really jive of what we're doing, in the markets, right? You're welcome from anywhere in the world, but we've got disproportionate amount of New Zealand and Australian people in our group, and that's a great thing, right? I think 20% of all Australians trade anyway, right? Come on, we got 19 prisoners on a island, and all of a sudden they make it into a nation. That takes like guts. They're not soft, right? Let's go wrestle a crocodile or something, right? Anyway, here we go. Trend line break. Ooh, okay. That is our 4-hour, but the monthly chart. Let me get back to the monthly chart. I think I moved too fast, right? Lots of support here, guys. Lots of support. It's bullish from this point on a monthly chart. However, you can lose your butt if you got long at the wrong time, right? It's now about timing. Using the lower time frames to find timing. Weekly chart, you can see that the little doji is a little tired. It's like, I want to go back to bed. My feet hurt. This is not fun. I've been bullish all this time. I need a rest. And the market gets tired, right? And now it's like, and then the 4-hour daily chart, I'm already in bed. I've already got my PJs. We do have support coming in. And let's see how far we've got 6106. There's support coming in there, and there's another support level down here at 5971. And if we take Fibonacci support there, because if they cut rates, sometimes when they cut rates, it makes the currency less valuable because the interest, you can't get as much interest holding that currency, right? So sometimes price will just drop, and we're at the 38% retracement right now. 50 back is at 6115. So maybe we could get a tag there. So short term, I'm bearish. But if we get a bounce from here, I am so bullish this currency. In fact, if you put Kiwi dollar, Australian dollar, and NASDAQ together, or the S&P 500 together, you'll see that they move in a similar fashion, right? Just maybe a little bit slower, but still they move. They're very sympathetic to each other. Okay, Kiwi dollar. Let's we move through that, and so a dollar CAD going this across the United States, and this is kind of interesting. They call it the loonie, not because it's crazy. Sometimes it is. That's crazy. Sideways movement from June of 2023. We haven't gone anywhere. Just like we are just going to peg our currency to the dollar and just keep it there, right? Like tether, like USD tether. They basically tethered Canadian dollar to the US dollar, and it doesn't really move out of this range. So that's why I really don't talk much about it. But in a range, you don't have to worry about being blown out. You have to get down to lower time frames, like a 30-minute. And if you get down to a smaller time frame, you see all kinds of trading opportunities on a short-term chart. You don't necessarily see any long-term. Look down here. Wow, it's a party down here. It's up, it's down, it's down, it's up. But if you look at that 4-hour chart, it's snooze city, right? So And so I'm not going to give a short-term prognosis of dollar CAD because it could change, right? It's bearish one day, it's bullish the next. It's loony, right? But think about it, it's going to be in a trading band. It's not going to blow you out, right? So there's lots of opportunity in there because why? We're bouncing between a range, right? Okay, so that's enough for dollar CAD. Let's get to gold, the shiny stuff, right? And that's been an exciting run, hitting all-time highs. Just a really, I know people that have, some people have lost their shirts on it, but some people have done quite well with it. Move all drawings, and look at this. It's just big move. We're at 2653. Look at that move. Look at how far we're above the 21 period moving average. Look at that space. That shows strength. The more strength, the higher you are from that moving average, the stronger this trend is. And we're several. Now, it can get so strong that it collapses and returns back to the scene of the crime. It kind of called mean reversion. But monthly chart, there's like no reason to sell this at all. Unless it'd be like running in front of a train to grab like $1 on the tracks, right? So there you go, your weekly chart. So I'm just bullish. Right, daily chart. Now, when you see red, now there's an opportunity to kind of moving sideways, small body dojis. This could be a high and tight bull flag because every time we get these little small dojis, we have a breakout, right? So we go, oh look, it's going to go short. Let's go ahead and get this little red candles here. And it can't go much higher than that. No, this thing could go up to like 3,000 to 5,000, right? It's gold, right? They're not making any more gold. I mean, they're mining it, but unless they bring that asteroid, there's some asteroid that's like totally made out of gold, And there's like, hey, well, let's bring that thing down here. Well, let's crash the market, okay? Supply and demand, like it's about the size of Rhode Island. They bring that thing down here. It's full of gold. The market's gone, Gold becomes like dirt. It becomes dirt cheap, right? That's why dirt is cheap. There's a lot of it. So bring in an asteroid made of gold, I don't know. I think it's a bad idea. All right, and we're kind of stuck in a range here, kind of moving sideways. After a long move, it's taking a break, taking a breather, high and tight bull flag. We have a bull flag in effect. And when you know about the bull flag, you take the flag pole, right? It's old school technical analysis, okay? Because I'm an old school kind of trader guy, right? Some guy goes, hey, man, you're just another new guru. I go, I've been around for 30 years. I've been teaching people for the last 20-something years. So, no, I'm not a newcomer. My YouTube channel is older than you are. It's like, So there we go. 2801. Right, so you can take expansion targets. You can take Fibonacci expansions too. I just buy gold. They are selling platinum. They sell gold at Costco. Now they sell platinum at Costco too. Look at that. Look at that expansion targets. All kinds of things going on. There's no, there's no prior resistance because this is the highest that gold's ever been in the history of the world. Right, this is historic. All-time highs, right? And I remember a man years ago, back in the 90s, said gold is going to go to $5,000 an ounce, and gold was like $300. The guy died before we ever even saw it break $500 an ounce, right? And he would come on the gold bug, the gold report, and now it's like everything he said is coming true, and so that's what we're looking at gold. Let's look at oil. Another commodity here. I'm not going to look at. We can look at silver briefly. If you guys are, I don't even have it on here. I can XAGUSD. It's like something, right? I don't even. Do we have it? No. All right, XAGUSD. Okay, here we go. So we get a nice move here. I mean, it's not as aggressive as as gold as its cousin. I mean, that spike to 32.90 and the sell-off does count means this thing might just move sideways to down for a bit. So I'm actually I'm very gold. I mean, go bearish silver is okay. I'm not really I don't like this, but I mean, even though it's an uptrend, that rejection, this tells me I don't want to have any part of it till we clear it. And it could take several days for it to clear. Okay, let's go to oil. And I'm switching with the commodities and we'll switch to oil. US oil. There we go. Let's start here. Okay. And look at that. And why we have tensions in the Middle East. We have Israel and Iran going at, plus Iran's proxies are shooting rockets into northern Israel, and Israel's going to retaliate. And so they've been kind of civil, like, yeah, tit for tat. I'm going to knock out some bases, hit some leadership guys, do some assassinations. But if they decide to attack Iran's oil infrastructure, we could see a very fast move up in oil, right? We can see $100 oil, right? And we're kind of been moving in the sideways consolidation, right? And the thing about it is, the rest of the world says, Israel, do not hit. No, we don't like Iran. No, yeah, I think your regime is kind of jacked. But yeah, what they're doing to you is not good too. And we tell Ukraine the same thing. Don't attack the oil, right? Right? You can attack them, but don't attack the oil, right? Spare the oil, right? Spare the oil and the wine. That's actually in the Bible, right? Spare the oil and wine. That's in Revelation 6:6. Do not spare the oil and the wine. So they want to spare the oil. They go, you can attack them, just leave the oil infrastructure alone. Doesn't matter if they're all dead and they can't even run the oil infrastructure. We'll just go in there and take it over. But just, if Ukraine, if you can attack Russia and don't touch their oil, or Israel, yeah, don't touch their oil, right? Yeah, maybe hit that nuclear plant. We don't care, but just don't hit the oil, right? And this is what this almost looks like the U.S. dollar. Like we got the sideways consolidation. If they do hit the oil, we see a big breakout to the north side, right? Monthly chart not moving anywhere. Bouncing off support here on the weekly chart and the daily. Look, daily has a break above the moving average, which would be our trigger signal for a possible buy back up. And, this thing has been ranging. The range, we have range there, and the range has been dropping. It moves sideways and then makes a new high and then drops. So it's been kind of, it's kind of stair stepping down. Maybe Iran says, nah, survival is a lot better than, like picking fights, through proxies and stuff and taking revenge. So survival over revenge is what Iran is considering. And it's like, will we survive as a nation, having our oil infrastructure hit, and we already have economic problems? Let's kind of like back down. We'll talk tough just to show they're not wimps. Show Israel that, hey, we're not going to take it from you guys. Hey, we're going to, but then on the other hand, like, hey, don't hit our oil. We'll be cool. It's just, I just got to, I got to, show up for my boys, my Hezbollah and all those other guys. I got to show up for them, I can't be looking all weak and stuff like that. So give me a way out to save face so I can stop without, looking like a wimp, right? That's what Iran's looking for, right? Now, Israel might probably not care, right? Anyway, that's that. We got that U.S. oil thing. Okay. Again, guys, I think that wraps us up for Bulls versus Bears. I hope you found this useful, informative. Come over and visit me at our wonderful our Forex Facebook group here. You go to forexfacebook.com/groups, and then go ahead and it's for the number 4x cash, and there's a link down in the description below. Okay, so I hope you found this quite informative and useful, and make sure you like and subscribe. And also, if you want to schedule a call, if you want to find out how to work with me, or even get online to learn about my compound blueprint, I got a profit acceleration call, 30 minutes. Could really change your life, change your trading. Maybe screw on your brain, your eyes. Oh man, this is what you might just need a little adjustment, right? You know a bunch of stuff about markets. You know about the markets, but you don't know how they operate. And maybe you just need a little refresher with me. Absolutely free. Click the link below. Book a time with me or my team. We'll be more than happy to help you. And if you found it useful and you think you're a good fit, we think you're a good fit, and you want to see how to work with me personally in coaching and to help you become a six-figure trader based on profit counts, like some of my students that have got funded for 250, 500,000, even $1 million account funds, and able to make a good living with using other people's money. Well, then also click that link too, and I'll be glad to share with you all the details. Okay. I love you guys. God bless you guys. Have a great trading week, and I wish you much success. Happy tripping. Greg signing out. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!